Good morning. Welcome back to Financial Issues. My name's Dan Celia. It's great to be here. We've got a little bit of economic news coming out. The big economic news, of course, is the Ukraine. Normally, we wouldn't pay a whole lot of attention to it, but it is a economic issue. I'm going to talk a little bit more about it at the opening of the second segment. But I just want to mention a couple of facts about all that. I wrote an article for it about that. I'll probably have it up on christianpress.com here in a day or two, and it will be in my newsletter. If you don't get my newsletter, financialissues.org, you can sign up for it. It's an email newsletter. It doesn't cost anything, and you'll get my email newsletter at the end of the day on Friday, at the end of the market day. So you might want to do that, and I'll include some of the details in that. Yesterday, I got a lot of attention when I was talking about our commodity issues, commodity stocks. What I did yesterday on my stock picks, I had included an agricultural commodity ETF, one that has not been on my buy list for a couple years. I know that there are many people that own this ETF because it is a very long-term hold ETF, and it is an opportunity to get some commodity. Well, it hasn't been on my buy list. Maybe, I don't think it was on my buy list all year in 2013, but I know a lot of people own it, have kept it because I've gotten a lot of issues from some of the partners, not issues, but conversation from some of my partners indicating, hey, do I hold this? Do I keep it? I haven't seen you talk about it in a while. Haven't heard you talk about it. I haven't seen it on your buy list. What do we do with it? And I've always been, hey, it's a long-term hold. Keep it. I know it's down. Well, yesterday morning, Monday mornings, for those of you who are not partners with me, on Monday mornings, I put out an alert or I put on my buy list this ETF, this agricultural ETF. So it's one to get a look at. Now, it had a great day yesterday. I doubt that many people saw it yesterday morning, although I got to believe there was a few that saw it and bought it. If they did, they had a good day yesterday. But it's a long-term hold. I think it's going to be volatile. It'll be interesting to see how it shakes out today as we look closely at what's going on in the Ukraine. U.S. stock futures are rallying this morning. The Dow was down 154 yesterday. NASDAQ down 31. The S&P down 14. So 153 down yesterday, and it looks like the futures are pretty much right now wiping out the losses that we had yesterday. So not only is this market incredibly fragile, not only is this economy very fragile, we've got, on top of that, we've got a lot of, I don't want to say uncertainty, but just irrational kinds of moves and behaviors, a lot of knee-jerk reactions that continue in this market. We're not going to be about that. We're going to be about long-term strategies, investing, and thinking as we look ahead into the economy. So I made some very interesting points back in April that I reiterated in an article this week again on my newsletter. You might want to check that out. But this Ukraine issue brings everything to the forefront. Now, the economics of this issue I talked about a little bit yesterday. And one of the things that are being talked about are economic sanctions to Russia. Now, Putin understands that there's not going to be any real economic sanctions, because economic sanctions cut both ways. They will dramatically impact the country that places those economic sanctions on Russia. As a matter of fact, the AP reported that Britain's foreign secretary said yesterday that all options are on the table as far as taking some strong measures against Russia. Now, he said that in spite of the fact that there was a leak that suggested that the UK has basically ruled out any kind of economic sanctions. Well, I got to believe that the U.S. is in the same boat, has ruled out any kind of real economic sanctions. So listen, pay attention to this. Here's the thing. There are some very bright individuals that are on the news programs talking about how we should invoke economic sanctions, some of which I respect a great deal. Now, having said that, you all know me well enough to know by now that regardless of the political party and regardless of how much I may respect an individual, when I look at the mathematics and read between some of the lines, it may fall in a place that I disagree with some of these very respectful people. Well, this is one of those times that I would disagree with some of those people. I don't disagree on the premise that economic sanctions would bring Russia to its knees. I said yesterday, and I'll repeat, Russia is a third world country economically. And it has been for many years and will continue to be. Yes, they are a top-rated country if you want to measure by military strength and military might. John Kerry has joked about Republican leadership that has said that, well, it acts like we're still in the Cold War from the 20th century. Well, this is confirmation that we are still very much in a Cold War and will continue to be. But economically, let me just tell you what the situation is economically here for the country. That we have to think of all of these things. And we have to watch these things very, very closely. A situation like we're having right now in Russia is the kind of thing from an economic standpoint that's going to push our economy in a recession in a hurry. Now, the banking sector, Russia is very dependent upon the American banking sector. The banking sector of America, the top 5, are very dependent upon Russia's flows in and out for capital to the banking system. They have a lot on the line. If we had economic sanctions, meaning that the assets are going to be frozen of Russia in our American banks, it's probably going to set the markets down about 2,000 points. I mean, did he say 2,000 points? Yes, I said 2,000 points. That's the dramatic, and not only that, not only is it going to hammer the big 5 financial stocks, but it's going to trickle through the economy and other stocks. Now, from a fundamental standpoint, I don't have a problem with that because I have been whining since early 2009 that that's exactly what needs to happen. See, what needs to happen in our economy, that the chips have to fall where they will, regardless. And that's how we build up a strong economy for the future and for future generations. But until we get rid of the baggage and the monkey on our backs of debt and worry and irrational gains, we're not going anywhere. So if there were economic sanctions, it's going to be devastating. Let me just say that Russia is one of the top 2 exporters of oil to the Eurozone and other parts of the world. Okay? The Ukraine is the 3rd largest exporter of grains to the Eurozone and one of the largest exporters to Russia. If either one of those things are messed up and the balance of all of that goes away, the global economy is in big trouble. We, the United States of America, export a huge amount of pork and beef to Russia. If that is turned upside down, that's going to have an impact on pork and beef prices. To us, it may be a positive impact because it may see prices go down because the demand is going to not meet the supply. So prices could go down. But from a grain standpoint, I don't think America has enough productivity from a grain standpoint to pick up a shortfall around the world in the Eurozone of grain exports from the Ukraine. Ukraine gets all of its natural gas from Russia. If there is an imbalance or there are issues economically, look out if you drive a vehicle that takes diesel or you heat your home with heating oil. Because heating oil, diesel fuels in Europe and America are going to go up dramatically to take the place of the natural gas shortfall. Look, the economic implications of all of this are not minor. This is something that we should be worried about. Now, normally we should be worried about it. We should be worried about it if things were good. We would be worried about this. Things are not good. Things are bad. We have an incredibly fragile economy. And it would appear as though, based on yesterday, a very fragile market. Not that we didn't know that. If you listen to me, you knew that. A fragile market. That any knee-jerk reaction or any geopolitical event across the globe that is somewhat dramatic in nature is going to impact the markets dramatically. And if it gets to the point where it's impacting the banking sector, those great, big, too big to fail banks, we're going to see a spiral downward in the indices to the like of which we haven't seen that are going to make 2008 pale in comparison. Should we be worried? Well, I think we should be watchful. Now, having said all that, if you have been a partner with me on the website, you've gotten my alerts. If you have been a partner with me on the website and you've been following my strategy and you've been listening or watching this program on a regular basis, you're okay. If you have taken heed to what I've said. Many of you at the end of last year got frustrated with taking heed with financial issues. You decided to get all into the market. You're the one that has to worry. Because if any of this plays out, you're going to see a dramatic downturn. That's fine if you're 35 or 45. It's not going to be that big of a deal for you because you got a lot of years to make it up. If you're 60, it's a huge deal. My position has been, I said this yesterday, I've said it in alerts, I'm going to say it in my newsletter. My position has been and has not changed that you need significant portions, 40 to 50%, on the sidelines. And I've been saying that for a long time. If you have taken that position, you can take a little bit of a sigh of relief and you don't have to worry because it's that cash that is going to carry you through a very bad downturn. And you'll be okay. If you haven't taken heed, if your desire to take that chance of losing half of what you have because your desire for a couple % more earnings far outweighs your logical thinking, then you're the one that needs to be worried. 866-300-9298. Financial Issues. We'll be right back.